Bitcoin could be preparing to have a break on the monthly chart over 30,000, being the first high time frame close over a prior bull market low for over 1,000 days. How is the short-term weakness looking? Is it something to be concerned about? How are the larger time frames shaping up? And what are the technicals suggesting? These are questions we're going to go ahead and answer today, so stick around until the end. Okay guys, welcome back to the channel. I hope you're all having an absolutely smashing weekend. It is Sunday, kicking back, relaxing, preparing, watching the charts and getting ready for the next week, because Bitcoin has actually ended up nearly closing this week above 30,000. Next week is going to be an incredibly important week for the overall direction of risk assets, and we'll discuss why in today's video. We're also going to talk about the macro charts, a couple new charts, a couple old charts. We'll bring up a bunch of technical indicators and discussing the strength of the current trend and healthiness of the current trend. We'll also talk about the short term, as there is now weakness being displayed on the short term. We'll show you a bunch of charts on the short term, telling you where the best places will be for shorting and what our continuation targets are going to be. Before we get into it, smash the like button, hit the comment button, and of course guys, subscribe to the channel. Do not miss another video. Click that little bell icon. You can also find us on Telegram. This is going to be the second link down below. You've got access to charts, educational posts, updates, news events, general market analysis, and so much more in here, guys. If you're interested in supporting the channel, you can do so by signing up to Bitget, 15% off your trading fees. And of course, if you're interested in joining our VIP, where we post all of our trading signals, scalp trades, swing trades, Bitcoin, Ethereum, altcoins, high leverage, low leverage, spot, everything is in there with exact entries, targets, and stop losses. You can find our entire trading track record. You'll get access to 2 main groups, and of course, you can find more information about that here. We have over 540 members currently. It'd be great to have you on board too. Let's go ahead, guys, and get into it with the market data. Currently, the weekend, of course, we are down 51% in volume. Expected, this is not out of the ordinary. Over the weekend, volume does drop down. With dropping volume, we do expect volatility to pull back, and with volatility pulling back, we do expect overall liquidations to drop too, and we have seen a 67% drop in 24-hour liquidations over the last 24 hours. So again, guys, we are starting to see a little bit of a slowdown in the price action, and that will be reflected on the short-term chart when we go ahead and discuss. You can see for the month, Bitcoin is up to 6.29%, so quite strong so far. Not as strong as what we saw in January and March, but again, as we approach 30,000, as we just break above 30,000, we do have to consider that our resistance starts to increase from that 30,000 to 40,000 move. There is increasing historical resistance, and therefore we're going to require more and more volume to push through that range. The 30,000 range still being a key rejection point until we get a monthly candle close. And we'll talk about that in today's video in more detail. Moving on from there, like we said, liquidations have been dropping over the last 24 hours. Primarily, we did see a whole bunch of shorts liquidate, which was absolutely insane. I haven't seen something like this for a very long time. And then we saw a whole bunch of longs liquidate, so really pushing up and down, doing a lot of chop price action. And I've been urging people, particularly yesterday and the day before, kind of stay away from the high, leverage swings right now, unless you have very clear breakouts on macro structures. Focus more on those scalps right now, because we are kind of in a chop zone, and don't make too many bold plays. Trade to saver charts, hold longs that you acquired before this run up, okay, ones that are a profit. If you're looking for shorts, we're not quite triggering the entries as shorts yet. You can see all these people try to front run the shorts, they got wrecked. We have to wait a little bit longer before we get into those entry zones for shorts. Anyway, moving on to the charts, guys, let's start off with the DXY. DXY has found a double bottom. We talked about this 2 days ago. We said the DXY is coming down to a major support, a very likely area where we are going to bounce, as we can see over here. And again, a nice local bottom over here. We did print a daily bullish engulfing candle, which is often a signal of a reversal. However, I would take one step further and say we need 3 points of confirmation. 3 points of confirmation. Number one being our candle we have a bullish engulfing candle, confirmation point number 1. Number 2 being the bounce at the double bottom in our major horizontal support zone. That is confirmation point number 2. And confirmation point number 3, probably the most important one, is going to be an entire trend flip. So we need to see this current downtrend break upwards and turn into a uptrend. Okay, so we need 3 points of confirmation for this one for a double bottom confirmation and a reversal upwards, and that is what we're going to see happen this week. We're either going to get that confirmation and the DXY is going to rally, we're going to see stocks pull back, we're going to see cryptocurrency pull back, or we're going to see a DXY nuke this week, and we're going to see Bitcoin break through that 30,000 the higher time frame and continue its rampage upwards, as well as the stock market. Now, you're probably thinking, Whale, you're spending so much time talking about the DXY. Why? Well, the reason why this is so significant is because this is one of the most significant horizontal supports we have right now for the DXY. Not only that, if we consider the DXY to be an inverted correlation to cryptocurrency and stocks, we can assume when the DXY is at major support, other asset classes such as cryptocurrency and stocks are going to be at major resistance, and that is what we're seeing. We're seeing the stock market, both the S&P 500 at a major resistance and the Dow Jones at a major resistance. Okay, a resistance zone on the Dow Jones, I'm just going to go ahead and draw it in, being this zone right over here. Okay, the distance between these two red thick lines, and on the S&P 500 being this range over here. And we're seeing Bitcoin right at that 30,000 major horizontal resistance on the monthly chart. We haven't actually cleared that yet. We're testing it. We're currently trying to break through, but it's a yearly long resistance. We need a monthly candle close to break it. So we are still at resistance. We are by no means on the trigger point on a horizontal scale, on that yearly, on that monthly scale, in that macro bullish uptrend yet. Like I've been saying this entire time, we are bullish. We've been bullish since 18,400 break. We've been buying much below that, but I have sold my Bitcoin here. I have sold my spot Bitcoin at 30,000, and that is a justified decision, and I'm happy to buy back if it goes upwards. But until then, we are treating resistance as resistance until it is not. Okay, guys, let's get into Bitcoin, and there is a bunch I want to show you today, guys. We're going to go ahead and start off with that 30,000. Why is 30,000 so important? I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So 30,000 is one of the most significant levels on the horizontal scale for Bitcoin. That being the major yearly trigger for a continuation upwards and officially a break over the prior bull market lows. There is a multitude of reasons to why 30,000 is so significant, and I could do an entire video basically just talking about 30,000, but we're going to try to smash it out in today's video nice and short. So the reason why it is so significant is because it represents a resistance point which once was a strong yearly low for the prior bull run cycle. If we look at the prior bull run, which is this area over here, okay, that top part of the bull run, we had a yearly long support which kind of held the price upwards. When we broke that yearly low support, we saw a strong red candle signifying a loss of a major support. If we lose major supports, we see strong red candles. If we break major resistances, we see strong green candles. Similar to what we saw over here. We had a yearly long support, we lost that, we saw a strong red candle toward the downside, and again, similar to what we saw over here, a nice strong support, and we saw a strong move toward the downside. These strong moves towards the downside always ended up in Bitcoin, resulting in a bear market bottom, which eventually developed into a reversal. The reversal we saw this time around was, of course, that falling wedge structure, our target being 30,000 from that falling wedge structure, the local support of the prior bull run. So the reason why this is so significant is because for the price to enter a macro confirmed uptrend, which could eventually develop into a bull run, we need to close a monthly candle above 30,000. If we look at prior cycles, we can see every single time we close a monthly candle above 30,000, we never end up back below it. And I'm not saying that's going to happen this time, but what I am saying is based on historical data, based on horizontal data, we can say there's a good probability that if we do close a monthly candle above 30,000, that will validate the fact that there is almost no probability that we're going to be creating new lows. Now, there are certain ways Bitcoin could potentially create new lows. Of course, the macro movements are very much dependent on three things: societal influence, political influence, and economic influence. These three drivers are what move asset prices on the higher timeframes and the broader spectrum. These things, these political decisions, these economic policies, these societal influences or perceptions of certain assets can completely shift and change direction of assets irregardless of what the technicals or the structural charts are showing on the macro chart. So we do need to consider that as we do move forward. But I've been saying, as long as systematic risk drops, systematic risk being the perceived risk in the market, as long as that drops over time, which it will drop as interest rates fall, the prices are going to rise. And I've been saying that ever since this bottom. I said interest rates do not need to pivot before the markets rally. The markets will front run the pivot because they see that perceived systematic risk is falling, and markets move based on perceived risk, not actual risk. So we have seen a strong rally upwards. We are retesting this point. The last time we saw a breakout of the prior yearly low was over 1,400 days ago. Absolutely insane stuff, guys. As you can see, this is the 4-year cycle, guys. And just to briefly reiterate what is going on here, if we do break above this level here, we can expect a continuation upwards. According to the 4-year cycle, we do not really expect the next bull run to start until March to April 2024, or two other things need to occur. And again, the bull run can be sped up. We can see an early bull run, we can see a late bull run based on economic, societal, and political decisions, influences, or factors that can influence the price action. Now, two things we do need to see to trigger an early bull run or trigger a bull run in general. Number one is, of course, a given, so I'm not going to mention it. That is the $30,000 break. How can we possibly see a bull run if we don't break over 30,000? That's an absolute given. Number two, the trigger for the bull run we're looking for is, of course, going to be a break over the first dead cat bounce we saw in the prior bear market. We can see the first dead cat bounce here represented by the dotted line. We can see the first dead cat bounce here represented by that dotted line. And of course, we can see the first dead cat bounce here represented by this orange line. Every single time, guys, we push above that on the monthly scale, that is when we enter an official strong, aggressive, parabolic move for Bitcoin. The length of our candles increase, our wicks start to drop in size, the prevalence of red candles almost dissipate. That is when the real volatility kicks in. That is when the move to the all-time high really starts to kick off. The next one we're looking at is, of course, the date range trend, that being a break over this specific date range. Now, coincidentally, or by no coincidence, hard to say for sure, we'll have to have 3 points of confirmation. Every single time we cross over the Ichimoku cloud baseline on the monthly chart, we actually end up in that bull market. And by no coincidence, we have seen that Ichimoku cloud cross over on that baseline exactly on these date range trends now 2 times in a row. So we are potentially looking for that at a third time around about over here. That is a 4-year cycle. We are not in a bull run. We are looking very bullish. We are on a high time frame bullish uptrend. We are not macro bullish yet. We are not in a bull run yet. We have said this many, many times. I'll say it one more time. We can see aggressive upward moves. We saw 200% here. We saw on this instance over here in last bear market, 200% rally before we even entered a bull run. And I'm going to say it one more time. we are going to see an aggressive reversal before a bull run. And I've said this the entire way down. I was saying it over here. We are going to see an aggressive reversal before we're in a bull run. Aggressive reversal doesn't mean we're in a bull run. A bull run requires specific economic factors, economic drivers, political drivers, and obviously levels on the chart to break to facilitate that bull run. We can't just say we're in a bull run because we had 2 months upwards. It doesn't work like that. Bull runs aren't just imaginary words we can toss around when we're on an uptrend. No, there are specific criteria we need to check off before we can classify the trend as a bull run. The trend is bullish, but it is not a bull run. Keep it nice and factual. Moving on, guys, I want to show you another chart. This is an important chart. Really quickly, talking about the next move up. Obviously, as we can see, Bitcoin has not closed the monthly candle up at 30,000, and therefore 30,000 is still resistance. It is still a level we need to close over. It is still a challenging point. It is still an area of which could lead to a higher time frame reversal down to 25,000. I'm going to talk about that reversal when we go into our short-term price action at the end of today's video, so hold that thought. But for argument's sake, let's say we close a monthly candle above. What are our next targets going to be? Looking at the chart, guys, bringing up our volume range, which has been an absolutely phenomenal tool. The entire bear market, entire bullish trend so far, it's been absolutely phenomenal. We can see when we start approaching past 30,000, particularly on the VIPV. It's kind of hard to see on the side over here. Oh, that's better. It's adjusted. You can see the VIPV starts to gradually climb up. What does that signify? It signifies that historical orders within this range have progressively increasing along the vertical axis, along the price going up. We have higher and higher amounts of order blocks in the historical orders. This represents more and more resistance. This means we need increased volume to push through this range. If we have increased resistance, okay, we generally have decreased volatility. If we have decreased volatility and we want to push upwards in an area of more resistance, we need significant volume. Okay, it is simple as that. They counteract each other. So we need a lot of volume to push from 30 to 40,000. I've been saying this entire time, guys. If we do monthly close over 30, don't expect a 2-week rally to 40. Don't expect it to happen overnight. It will take time. It will most likely take 2 or 3 months. It could take time to develop. We still have a lot of volume to push through before we get to that resistance. As you can see above that range over here, it starts to fade away again. Therefore, the volatility will start to increase. The required volume that we need to see to push past 40 to 48 decreases, and it'll be easier to push through. Now, we can use that same logic on the downside, which we will talk about the rejection when we do our short-term analysis. So there's another chart I want to show you, which is going to be this one here again, but we'll take a look at on, I think it's going to be the 14-day. No, my bad, it's the weekly. We'll go to the weekly. Now, we looked at this chart a few weeks ago. Actually, it was a good chart we used to predict a move upwards from around 25K to 30,000. We said that every single time we close or break above, and by close I mean we need a pivot point above the RSI on the 62.09 on the RSI here on the weekly, we end up seeing a rally. We saw every single time these vertical green lines represent a pivot over this horizontal 62 line. We saw a nice strong rally. A pivot over the line, we saw a strong rally. Again, a pivot over the line, we saw a significant rally. Once more over here, we saw a strong rally. And again, we have pivoted over that 62.09 on the weekly, resulting in a pretty decent rally. This could be an indication that the weekly momentum has broken past a macro shifting point that could facilitate a continuation upwards. This is an added bit of information we use when we're analyzing the bullish macro trend or the probabilities of this macro trend decreasing. Because we see this here, we do have to have the assumption that any higher time frame pullback that occurs will still keep us in an uptrend until major horizontal levels break. One of the major horizontal levels that we are looking for to remain above is, of course, the 24.4 to 25 level. Therefore, with the current information we have on the macro, any rejection that occurs that remains the price above this level will keep us in this strong uptrend we have developed. Anything below, it starts to get a little sketchy, and of course anything below the support chunk we go to new lows, so keep that in mind, guys. Looking on the flip side, every single time we see that red vertical line, the breakdown on 62, we see significant drops. We see 80% drop here, we saw a significant 30% drop here, again we saw a significant 50%, and we saw even that bull market drop of 80% over here. So we're seeing some significant drops, a really valuable chart to look at. Let's go ahead and talk about the higher time frame once more on this chart, run through a bunch of indicators, then we'll do the short term, and then we'll finish up the video. And of course, the short term is probably the most important part of the video, so definitely stick around for that, as there's so much information for the next immediate move for Bitcoin. So currently on the weekly chart, there is absolutely no doubt the trend is up. Every single time we break above the 200, we get in a high time uptrend. But what we need to see is that 50 EMA cross above the 200 to signify a strong high time frame uptrend. We are still a little shaky here, even though we're pushed up, even though we had the reversal at 30,000, we are still a little shaky here on the weekly chart, and that is another thing we need to be concerned about when we are looking at the short term and potential pullbacks. So I'd like to see the 50 break over the 200, cross back over to signify the trend is very strong. Now, there's a reason why we have seen the 50 drop below the 200. That is because this bear market was actually a month longer than we have traditionally seen. And of course, these moving averages go off date ranges, so we have an extended downtrend that are going to reflect more bearish signs of what they would usually reflect as if it was a 12 or 11 month bear market. So it's not something I'm applying too much significance to, but if it does cross over and we do flip, it will signify overall strength. So right now, not very significant, but when it does cross over, it'll be a little bit more significant, as it does suggest overall macro strength. Another thing I want to take a look at is going to be the Bollinger Bands. As we can see already, the Bollinger Bands, we are compressing to the upside. It does suggest we have increased volatility as the distance between the lows and the highs have increased here. We are pinching along the top side, which is great to see when we're in aggressive bull market trends. But again, we are not in a bull market. We are in a strong uptrend, as this does suggest, but as you would know, when we retest these high points, the probabilities are there for rejections and pullbacks towards the midline. The midline brings us down to around 25,000. So we are watching for that rejection still. That is still something to keep in mind. The Bollinger Band on the weekly is bullish. Let's take a look at the Ichimoku Cloud next. Ichimoku Cloud on the weekly chart is here and there. Okay, it's here and there. We have a few bullish indicators. We have the price action above the conversion line and baseline, that being the red and blue line over there. However, the price action is within the Ichimoku Cloud. This is not a very good sign, because Ichimoku Cloud does represent resistance and generally is a no trade zone and a period of indecision. We can see the price flip around in this zone. We do want to see the price break above that on the weekly chart. So here and there, and of course the Gaussian channel exceptionally bullish, breaking through the midline, closing a weekly above it, looking phenomenal. Next resistance for the Gaussian channel is going to be the downward sloping band. Of course, that brings us to around 31,700, which is going to be the low resistance range of our next target. If you remember our video from the other day, we said 31,700 to around 32,300 was going to be that next high time frame target, the next short-term time frame target if we get the break upwards. So let's go ahead and talk about the short term, and then we'll wrap up the video. On the short term, guys, we have a whole bunch of stuff going on over here. We have our current range. We have a current uptrend. We have our 28,800 trigger. Remember, we said if we break over 28,800, we clear this entire range here. We shoot up to 30,000. We saw a shoot up to 30,000. We actually went a little higher. We saw a break to around 30,900, creating a local top. Currently, we are in a new range. The range represents this distance between our local resistance and our local range low. This is nothing more than deviation for now, okay? What we need to see for a continuation upwards is a break of the local resistance. A push past the local resistance will result in a move towards our trigger point. A break of the trigger point is going to take Bitcoin to 31.7 to 32.3. That is going to happen as per the charts. However, guys, if we break this range low, we have a very high chance of filling Okay, and by filling I don't mean completing, I mean filling the gap in the VRPV between 29,800, that trigger, and 28,800. You can see a whole gap over here in the VRPV. This is an area of which the price can consolidate in and develop a new support or resistance within that range. And I'm looking for a short on that, or looking for a entry into that range if the 28 or 29.8 level is lost on a higher time frame. I will expect that to be the trigger towards the move down. Now, even if that does occur, we are still in an overall uptrend. As you can see, this uptrending support line, this current uptrend line, does represent a nice strong uptrend. This uptrend happens to lapse over the $28,000 level, which you would know as the lower point of support within the 28 to 30,000 whole large time frame horizontal support. So if we do lose this uptrending support line, we will be retesting 28. If we lose 28, that is when it starts to get dangerous. A loss of 28 can very well push the price action all the way back down to 25,000. Okay, guys, and as you would know already, if we lose 25,000 to 24,400, we are not looking very good. So a drop below those trigger points could result in that move. That move is definitely still possible. It is actually quite probable, but for now, we are in an uptrend. For now, the short term still looking all right, but it is showing signs of overall weakness. So a quick TA, guys, and then we'll wrap up the video. Currently, we are starting to see on the momentum chart, we are starting to see bearish divergences show up. We saw quite a strong bearish divergence right over here. Of course, that top at around 31,000, we've of course broken down. We saw a significant pullback towards a nice diagonal support. We developed a diagonal support over here. As you can see, I'd be expecting this level to be acting as a bouncing point. Of course, if we get over this local high, we can expect the price to go upwards. A loss of this low here, we can expect the price to retrace back down to retest that point. Overall, from a trend perspective, we are still upwards. However, it is weakening. Looking at the 45-minute chart, we are underneath the 50 EMA, the hourly chart. We're underneath the 50 EMA, and the smaller time frame move averages are crossing back down. 2-hour chart, bouncing on the 50 EMA, potential bottom here on the RSI. So watching that local low for the RSI for a bounce point. So again, not really in the deep end yet, but getting very, very close. So guys, again, if we do lose that trigger point, we do have a huge gap we can fill. So the bears can definitely take control again on the shorter time frame. With, of course, Bitcoin dominance falling, this could spell disaster for Bitcoin. And of course, if Bitcoin dominance starts to rise again, altcoins are going to suffer. So keep an eye on it, guys. Of course, the short term is not decided yet. The short term will most likely not be decided until the DXY opens up, until the traditional markets open up. I don't think we're going to see a significant move out of the current range for now over the weekend. I think we're going to see a bit more ping-ponging in price action, a little bit more stagnation. Again, the range being the distance between this green zone and this green zone. A little bit more ping-ponging occurring, I think, until the markets open up. Again, going back to the DXY, refer back to that. If DXY drops down, we're clear, we're good, we're going upwards. The DXY actually breaks that trend and bounces. We're expecting a strong pullback for Bitcoin. And if we do get that strong pullback, if we do come down over here, that does confirm that there's a higher probability of a monthly rejection on 30,000. And I'm going to stress, we have never seen a monthly rejection at this level before. Okay, so keep that in mind, guys. It could be potentially dangerous. It could result in something significant. But again, as long as we stay over 25.2, we're good. I'm going to end the video. I hope you enjoyed. I'll catch you guys tomorrow. Thanks for watching. Check out Crypto Academy courses at gmail.com. All the content down in the pinned comments, so you can find all the information for our 10-unit course. We teach you how to trade. We teach you everything you need to know. Thanks for watching. See you tomorrow.